Facebook, YouTube, LinkedIn, Twitter, go to webinar as well with my fellows over here, confirming that they can hear me loud and clear. So this is a live analysis as usual every Wednesday, trying to help with anything we can. Your trading, any questions that you might have in regards to trading, fundamentals, technicals, anything that you're struggling with, even news. I mean, to understand, to comprehend the news and how they might affect the market, etc. So this is your session, guys. As I keep saying, so I would like you to ask me anything you need, anything you don't understand, anything that you want me to help you with. Sorry. So we are all live and everything looks just fine. If not, just let me know. Good morning, Emily. I guess you're somewhere in the world that is morning. This is lunchtime for me. So, okay, welcome everyone in GoToWebinar as well. Manuel, Odondo, Gift, Jimol, Samson, Mohammed. Ma'am, what is the 100 FE? Oh, it's the, you mean 100 Fibonacci expansion. So Fibonacci is in general, I will explain a bit the Fibonacci since you asked for it, even though we haven't started analyzing the markets or using, maybe you have seen my screen, right? Oh yeah, I guess this is it. Okay, let me just enable it in Facebook and social media as well. I had this on, that's why my dear Mohammed is asking what is a Fibonacci 100. For a Fibonacci sequence and in general Fibonacci expansion, Fibonacci levels that I have over here, remember they are tools for traders, right? They have, very briefly, I will explain a bit, Fibonacci's in mathematics, right? Sorry, it's a sequence, it's a theorem, okay? It was named after Mr. Fibonacci, obviously, and other stuff, but I would like to be introduced to trade with you guys. Okay, wait a minute, one by one. So, yes, what I was saying. Sorry, explaining the Fibonacci. So, the tools that I'm showing over here, team, the Fibonacci extension and Fibonacci level, these two tools, one over here and this one over here, are tools that have been created over the years for traders, not only traders, investors, and in general market participants. And they can be used for identifying key levels, retracement level, pullback levels, potential target levels. So these are areas, theoretically areas, where the price may reach and reverse and etc. So it's based on the theory of Fibonacci, actually, on the theorem of the Fibonacci, which is in mathematics, we have the Fibonacci sequence. I don't know how many of you are familiar with this theorem, this sequence, but is one of the most critical sequence invented in mathematics, and it has helped society, the history, the medicine, the architecture. Is the fundamental for a lot of things that we have in life. Is basically it's a sequence of numbers, okay? It's a sequence of numbers. I cannot really go in deep of all this right now, but we have a Fibonacci webinar that you can watch, and I'm explaining in detail what it is and why it's so important and why we are using it in our daily life, obviously without knowing it. But yeah, as I said, it's the base for a lot of jobs and theories in life: architecture, civil, medicine, biology, marketing, the creation of logos, a lot of things. So for trading, just to keep it simple, because it's a live analysis and we want to, I want to brief you up with what's going on in the market right now, the news, the data, what you should take care for the rest of the weekend, etc. I will just summarize all this by saying that Fibonacci levels and Fibonacci extensions, they can present, they can help a trader, okay, to identify some levels of significance in the financial markets, reversal levels, target levels, support and resistance levels, and etc. Very, very commonly used. Um, general for, for institutional players, retail traders, and etc. Um, because it's like, think about other tools of trading like pivot points. Again, pivot points provide us some key levels of some key levels that we can use as support, resistance, targets, and etc. Pullback, reversal, etc. So this is what something similar, with only difference that um, uh, the um, uh, there has been proven that the most important level to be seen in Fibonacci ratios is the 61.8%. Initially, this is the very first one that is very important, because usually, based on the theory of Fibonacci, this level is a level that we tend to see reversals. Okay, reversals. So let's move on now. Before I explain what I'm showing over here, actually that wasn't my purpose to show you pound Aussie. My purpose was to start as usual with the basics, dollar first, stocks, especially because they're earnings season, etc. So let me take a step back, let you know what happened so far today. And to keep an eye on your questions as well. Afternoon, and Andrea, the best. Thank you. Look, euro dollar. Yes, let's start with that one. Let's start with that one. But in the meantime, I would like to brief you a bit up. Okay, remember, we are not in the mid. Let's say, actually, we are in the mid of earnings season, but we have still a lot of big companies reporting. Last night we had Microsoft and Alphabet, trillion market cap companies, very big companies, and that is something that affects the currency market as well, right? So what we have seen so far this week, we have seen some positive and negative earnings reports. Positive, the Alphabet and Microsoft, for example, reported a better than expected earnings in the first quarter. What that's supposed to mean? That means that they show that regardless of what's going on around us, all this uncertainty, high inflation, increasing interest rates, which, as I explained several times, higher interest rates is not only bad for us. I mean, we pay obviously more in groceries, we pay more in everything nowadays, with the fact that interest rates are increasing. But this is bad also for these companies, because that means that they have higher costs, and because they have higher costs, they have to increase the price of the things that they are selling, or the services that they are selling. So now less and less people can afford this kind of increase in the prices, so they might see some kind of lower demand, right? Also, we had the banking crisis, with crucial and big banks failing and gaining support, right? Don't forget Credit Suisse in Europe, Silicon Valley in US. So that's why it was expected to be a very pessimistic earnings season. But yesterday, Microsoft and Alphabet presented a much better than expected report. So it was a positive. They showed positiveness. But Unfortunately, that doesn't hasn't eased a bit the worries around the recession, the global recession, because along with Microsoft and Alphabet, we had seen first Republic Bank and United Parcel as well, but what drove the market lower yesterday, spread the fears once again. It was the First Republic Bank, who actually reported a significant decline in deposits in the third quarter of the year. So what that's supposed to mean means that people, due to fear, they're taking their money out of the banks, right? So this is something that added some further worries in the market, uh, especially in the financial sector, to be honest, because the technical sector helped the market, but the financial sector, we have seen the financial sector and by saying financial sector, I mean check all the initially check all the company shares that are banks. They are in the banking sector, they're in the financial sector. So financial sector has been in a big loss since yesterday. So First Republic, for example, I have it somewhere. That's here it is. Can you see that, guys? It saw a 50% dip yesterday. So 50% decline. And whether we may see on the US Open today something similar, and you cannot see it. Why you cannot see it? Let me reshare my screen. Here it is. Perfect. 50% dip. You can say to me, but Andrea, we don't care right now for stocks. You should, because it's earnings season and stocks earnings season affects the stocks price, but also affects the rest of the sentiment, and as a consequence, major indices, currencies, and etc. So what happened? The fact that we had such a big sell-off, pessimistic comments from First Republic, from United Parcel, and from other banks as well in the very first week of earnings season, is keeping that fear of that fear of recession, of also the fact that all this banking crisis that we have seen a month ago could be seen actually in practice, in numbers, the second quarter. So that the worst are in front of us to be seen. So that's why, let's summarize a bit, because that's taking too long. Financial sector in the market is still under significant pressure, and we might see something similar in the US Open. While due to this fear that the earnings have spread, the positive data of Google and of Alphabet and Microsoft have been a bit ignored, a bit, and we had seen some risk aversion, which boosted initially the dollar higher yesterday, right? Bam, 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 bam. They tried to revert some losses, as you can see, okay? Even though this is what happened yesterday, some risk aversion has been seen. It was also the weaker data, confidence data from US, combination with their report, added to the fears of a downtrend in growth in the second half of the year. And that is responsible for this temporary boost that we have seen in dollar. Today, in this Asian session, you can see that everything came back to normal, we could say. So benefited initially as a safe haven along with gold, but eventually today it came back down. So corrected. Risk aversion has stabilized, and the demand for the dollar waned. And this is the overall outlook as well. So if I zoom out and go to the weekly chart, you can see that dollar has been to the downside since last year, mid of last year. Let's not forget that the overall picture remains correlated, stick with the central bank, the Fed, what is doing, increasing, decreasing rates, pausing rates, and etc. So the fact that we are near the peak of the interest rates is what has caused since all this decline, which has resumed also the last 2 months. So the overall outlook for dollar remains negative. Now, so dollars, you can see, still keeping this 100 level support. However, the overall outlook remains negative, considering the monetary policy outlook. Now, you asked me about. Let me just very quickly I would like to remind you as well that today, because we spoke a lot about, we discussed a bit about earnings, but I didn't mention what we are expecting today. Today we have Meta. Okay, Meta, Facebook, Meta platform, Thermo Fisher Scientific, Boeing. I'm not sure if Boeing hasn't reported. Thermo Fisher has reported, but yeah, definitely the key, the biggest of all, will be Meta, the number one. Another tech company, to see whether it will see something similar with Microsoft and Alphabet. But always have in mind that the move that we have seen overnight, it was short-lived. So dollar index in the medium and long term, $100 level remains as a key support level. This is something that we keep saying. But overall, the outlook for dollar remains negative for the rest of the year, with a significant medium-term support at the 200-day week moving average and the 98 level. Now, let's go intraday to the 1 hour chart, because it will be a nice shift to the euro dollar that Emily asked. So, we've seen this nearly full reversal, right? As I said, the strong tech giants earning, but the negative the negative news from UPS and First Republic have initially boosted dollar higher, but now that today the market reversed all these gains and came back to the 101 low. Sorry. So risk aversion has reached its end. Big bearish candles has been seen in the Asia session this morning, which you can see that. Just put the. Here we are, 1 hour chart, which they have extended the asset below the pivot point of the day, and actually even below the very first support of the asset. So the next support levels is the low of the day, which stands at 100.95, while the very next support for the day for the dollar index is at 166 level. Now, let me just zoom in a bit. You can see that the dollar has been in a downtrend, right? Failing for how many days? Let me just measure it. 31 days in a row to extend above the 20-day moving average. So all these consecutive lows and they move below all the moving average. The the momentum, the negative momentum that persists, just present that any rebound could be just a correction of this downtrend. So next key levels to be seen, as I said, the 195 is the low of the day, and the next support level for the asset, the immediate support level of the asset, and the very next one, if the asset managed to break it and close up below it, it would be the 163 level. On the upside, the pivot point remains a key resistance for the asset, but yeah, it doesn't change the negative bias. Euro dollar, and I'll start as usual with the daily chart just to show you this upwards channel that has been sustained since the mid of March. It is it's a month and a half of an upwards channel with the price moving within this channel. So on the dollar weakness, on the some surprising in that the Fed is along, not only the Fed, actually a lot of banks are near their peak in the interest rates. What's I can hear something and I cannot stop it. Just a second. So yeah, it's everything about central banks. The fact that the Fed is at its peak, ECB is expected to increase another 25 and 25 points in interest rates is what has one of the main things that have affected the euro dollar and have boosted the euro dollar to 110.70 territory. That's the high that we have seen for 2 consecutive weeks. Can you see that, guys? So that makes it a key resistance level, which if it doesn't manage to break, because it's something that it was retesting again and again for 2 weeks, yes, more than 2 weeks in a row. So that suggests that this is a strong resistance level, which if it breaks, it could open the doors to the levels that we have seen back in September to December 2021. Can you see that? This is my weekly chart, and I know that you might not be interested in such a long time frame. It's just to show you all these down leg that we have seen since the 2020, right? And the fact that the asset has managed to recover more than 50% of this 2 years dip, and is extending gains for 1, 2, 3, 4, 5, 6 weeks in a row, six consecutive bullish candles. So this resistance level, the 110.70, is significantly important, because a break of this level could lead to a potential retest of September to December area. Okay, so if, for example, I'm using my Fibonacci extension on this later swing, it does justify this level as well. Can you see that 110.70 is also the 100 Fibonacci extension? So that is another clue that this is a very strong resistance level, which might not break, but if it does, because it's so significant, that will mean that we might see more bulls entering the market. So that's in the long term, long and medium term. Now, because you asked me about 1 hour chart, so let's go back to the intraday setup. So out, here we are, full reversal. Again, failing though to extend above 110.70 level. Can you see that it was a nice strong rally, but because we have an overbought condition over here. We have seen the last less than 3 hours, the asset trying um, um, to stabilize a bit, to correct a bit, because this is an overbought condition. Okay, so it needs a bit of a correction, and this is what we have seen over here with this doji candle outside Bollinger's. This and this long tail with a small body candle, implying that there is a further bullish bias. However, it's overbought, so it needs a correction. So as long as the asset remains above the this first resistance of the day, or just to be more precise, we'll put a little Fibonacci over here. So that's it. Yeah, that's a much better level to be seen. So as long as we see the asset above the immediate support at 110.25, if this 110.25 holds as a support level, we might see further an increasing bullish bias for intraday for euro dollar. You can see that also by the technical indicators. So what we have over here, Bollinger Bands keep extending higher, right? Asset below all moving average, 20, 50, even the short-term ones, 5 and 9. RSI in the overbought area, however, is still pointing higher. You see, neither flat, neither pointing lower, keep pointing higher, suggesting that there is some further steam to the upside. MACD is a bit mixed, so turn positive, but the signal line is still below zero, so that justifies the need for correction. While the stochastic is the only one that is suggesting a bit of a pullback, but still the fact that the slope is not significant, it suggests that it could be just a short-lived correction before that it basically it means that it hasn't reached it hasn't ended, the bullish momentum hasn't it's not over yet. Okay, it will be over once we see the asset. It could actually put back lower and potentially retest again the 109.65 level, the 109.65 low, if we see the asset breaking this immediate support at 110.25, and we see further decline of the stochastic and RSI back below the overbought area, and more precisely at the 50 level, which is our neutral level in both RSI and stochastics. So hopefully that helped, Emily. If not, let me know and I will explain again. Someone is spamming me over here, so I will just give me a second. Questions. Oops. Oh my god. I've lost all of your comments, guys. Guys, for the people that they are on YouTube and Facebook, can you please add again your comment? For some reason it has disappeared and I don't have your questions. I remember that someone asked about gold, someone asked about Bitcoin, but I don't know what else. Everything has disappeared. Please, Emily and everyone, please stick your question again. Yeah, Michael was gold, and I had another question for gold in the GoToWebinar as well. So let's keep going. Let's do gold actually. So as I said, we had some bit of a risk aversion yesterday, but today that have the temporary boost of dollar pulled a bit back the gold. However, uh, gold remains close to the 2000 territory. So let's start with the usual. So gold remains to its to an overall upwards momentum for actually 6 months now, more than 6 months now, holding. Actually, this is kind of a. It looks like a pennant. The formation over here looks like a pennant, up, and we have um, this pattern over here that looks like a pennant, not a flag, a pennant. So this consecutive, this is a daily chart, by the way, guys. So where is Michael? Michael asked about buenos días, ¿por qué no hanos en español? I don't understand what's saying, Perez, but we have Spanish, because I think this is what you're asking. In Facebook. You know what? I'll try, because I think you've been here before. It's the same thing. Our Facebook site. How can I reply to reply? Okay, so and the possibilities of seeing euro dollar near the one once again during the let's finish. Oh, Ahmed, how are you? I just saw your name. How are you? Okay, I will get back to you just to finish the gold analysis, my dear Ahmed. So yeah, gold. Um, this pennant, this look like a pennant. So this concept, considering that uh, consider this pattern, the consecutive also I have connected my highs and lows over here in this daily chart. You can see that we have consecutive highs and consecutive lows, just confirming the fundamentals as well. So positive near term, medium term and long term outlook for gold, holding above the within the 1900s territory, more precisely close to the 2000 territory. Momentum uh, uh, momentum positive as well. So the latest high that we have seen this year, the 2045 was it? Let me be precise. 2049 level remains the potential, a key resistance level for gold, because also fundamentals support this the positive outlook of gold. So gold has continued. Okay, let's go to the 1 hour chart. Has continued to trade since Monday, actually, very close to the 2000 zone. It's a bit in a tight range. Okay, a bit in a tight range. If I just get rid of that, and I will just, you see, within a tight range, but sustains this area, this range. So don't forget that lately is all about central banks, and yeah, central banks, let's say. Central banks. I will not go to the banking sector right now. Central banks. Oh, is that for? Okay, I will explain this for. Let me double check. But so I would don't forget that it's all about central banks. Next week, actually, we have, if I'm not mistaken, RBA, ECB, and Bank of England. Let me just double check. RBA and FOMC. and Europe, ECB, and it's an NFP once again. So a very, very significant, important, busy week ahead. So ahead of the central bank meeting, we have seen some neutral to positive conditions going on in gold. Um, some support, safe haven support, but also remember that the gold is correlated with interest rates uh, connected. So um, so even though the overall outlook remains positive, the anticipation of all these banks next week could add some ceiling to the gold. So the ceiling is the obvious and is the 2000 territory. And to be more precise, the latest high was at 2364. This is the latest high. Okay, right now, the last hour, actually right now, let me double check my calendar to see uh, what has caused this fall over here. We have still 45 minutes to go until the durable goods. Am I missing something? We had mortgages picking up a bit. It was mortgages only, or it might be just the anticipation of durable goods. So market participants are pushing a bit the gold lower ahead of the durables, because I cannot spot anything else right now other than the U.S. mortgage activity, which is not so significant data as the durable goods. So then there might be just a pressure to the downside ahead of the announcement, ahead of the durable goods. But you see, the still it's within the range, So immediate support for gold stands at the mid of this rally, 1990 is a key support level. Quick view on euro, please come late. So yeah, 1990 immediate support level. If we see a break of it, we might see the asset retesting again the floor of my pattern, the floor of my trending line, 9080. However, overall remains in a positive mode. So 45 minutes to go until the durable goods. So be a bit patient, guys, because this might be a short-lived move just ahead of the data. It's a key. It's at the key support level, to be honest, ahead of the data. So you need to be a bit careful. Double check there is there is anything I've missed. Yeah, no, that's pretty much it. Overall bullish momentum prevails. Some intraday swings, but 2000 remains the key resistance level, which could open the doors to a potential retest of 2020 level and 2045 level, while to the flip side, the immediate support is 1990. So as long as the asset doesn't break that level today, the 1990, this pullback could be just a bit of a correction before another attempt to the upside. The break of 1990 could retest the floor of my ascending line over here, which stands, this one, which stands at 1980. But overall, there is a bit of divergence with the MACD over here. Is this right? Okay. So rising RSI, rising MACD, but hasn't turned positive yet. Flat actually is at zero, so that actually confirms this tight range that we have been the last 2 days, 2 to 3 days. So that's strengthens more the scenario that it could remain in this range above 1990 before another attempt to the upside. So. Yeah, so just summarize a bit. In 1 hour chart, intraday setup, 1990, key support for the day. If breaks, the next support is at 1980 level. If 1990 persists and holds, the outlook remains positive in the near term and medium term. So we could see the asset continue flirting with 2000 territory, which with the latest high being in 2003 or 2004, which if we see a confirmed breakout of it, then 2020, 2045 will be, we could see retesting again those levels. While in the long term, guys, don't forget that fundamental support is the year's positive outlook for gold. Now, next question. I will get back to Ahmed because we have already replied and discussed about euro dollar. So I will come to dollar cat later on. Ahmed is saying over here for a more long-term view, because the US elections are for next year, 2024. So it's a very long, no, it's not a very long view, but it's a long view for sure. The election will be on November next year. So we have a near year and a half in front of us. How they could affect the dollar, basically, not only euro dollar. Theoretically, dear Ahmed, there is a correlation of US elections and the US elections and dollar. So as a consequence, euro dollar as well. So I'll just zoom out. I'll put my years outlook over here. So here we are. Okay, here's the weekly time frame, because Ahmed asked about the US presidential elections, which will take place in November 2024. So the only thing that I can say, cannot really say will breach or not the 1,000, because it's okay. If we consider that in front of us in regards to the global economy, the global recession, we're expecting the central banks to pause increasing interest rates ASAP the next 2 months, okay, to pause, and we're gonna have and they're gonna hold the interest rates until the end of this year. The prospects are that they will start cutting interest rates in 2024. However, a lot of scenarios are still in play because we don't have the necessary cooling off of the economy, the necessary decline of inflation, and etc. But now the potential cap, we expect to have potential cuts of interest rates. next year, 2024, the year of the elections. So by November 2024, we're expected to see the central banks cutting rates. Cutting rates means a depreciation of the currency, not only from the for the euro but also the dollar eventually. So that usually the one that first cut rates usually is the Fed, and then ECB tends to follow. If we have this in mind, we can say that uh, that we might see further advance of euro dollar. So weaker dollar against a more stronger euro if Fed starts cutting rates first. But there's a lot of buts, a lot of scenarios ahead, and etc. Now, in regards to the elections, theory has proven so far, history has proven so far that U.S. Elections obviously is one of the most important events in the economic calendar. But if we consider the history of elections, they might not have a significant long-term, they will not actually have a significant long-term impact on dollar or euro dollar, my dear Ahmed. Okay. It's very usual to see them, of course, the euro dollar, the dollar reacting on the elections, but in the near term. So I don't agree a bit with the one level, with the one territory. First of all, because such a long-term view should stick only to the fundamentals, and more precisely central banks, interest rates, monetary policy, growth, recession fear, etc. Elections will tend to have a near-term impact in the currency market. And by near term, I mean the month of the elections, on the announcement of the result, and etc. So a near-term impact. What else? So based on the research, the US dollar has shown greater gains in the near term when the Democratic president holds to the higher office compared to the Republican White House. So based on the research over the years, dollar tends to gain if we have a Democratic president. Um, um, uh, what else? Yeah, that's what the we've been seen based on the research. Now, in regards to the euro dollar, when we talk about the US dollar performance, we are talking about a currency pair, right? That examines two words: Europe economy, European Council Commission, etc., and US economy, US government, etc. According to the theory, what we have seen over the years, a significant change in the value of the euro dollar, of the US dollar, sorry, on the day after elections is unlikely. But whether it will appreciate or depreciate in the months after the polls will be dependent on the candidate, which candidate wins. So yeah, the key would be the polls the day after sorry, not the elections, the actual elections days or the election, the days after the election, but actually the polls. We're gonna have the polls coming out, but again, this is a near-term movements that we might see. It shouldn't impact the overall year trend for euro dollar. Okay. So if Trump wins, the impact on the euro could be lower. This is what has been seen last elections. Um, and if Biden wins, it'll be the vice versa. But who knows? The polls right now show that Americans don't want neither Trump, neither Biden. But it's pretty sure that it will be those two again. So dollar cat. Dollar cat. How can you use a bit on? Okay, John, I've seen your question about 5 and 9 exponential moving average in 21. We have, by the way, a webinar solely for our strategy 5, 9, 21. It's all about the crossings. But I want to reply because Siyada is waiting for a long time. Let me do the dollar cat and we'll get back to you. Okay, dollar cat. Actually, it's quite interesting. I was watching it as well. I had in my little list over here that I was doing since yesterday. And I have dollar cat to the upside, question mark. Why is that? A very strong move has been seen the last 2 weeks, reversing more than 50% of the declines that we have seen in 2 months. And the key for me is and for you I think as well, is that the yesterday's candle, which is a strong body candle, nice big candle, strengthening the increasing positive bias for dollar cat. So we have seen a bit of a change, right? Negative momentum over here has elapsed, reached to 0, even though the signal line remains lower. Moving average has turned above 20 to 150-day moving average. It breached the 61 Fibonacci level, something that could mean that we might see it correcting a bit, struggling to break the 61, consolidating between the 50 and 61 Fibonacci level. This is the 50 Fibonacci level. This is the 61 Fibonacci level. So for the time being, what the technical suggests in the daily chart is that dollar cat is running out of steam because it's oversold. It's overbought. It's outside. It closed outside Bollinger's. It's at 61.8 Fibonacci level, which is a very strong retracement level. Momentum is at 0. So all this means consolidation. Okay, consolidation sideways move between 50 and 61, but it means consolidation for the time being, but it shows also a potential sign of further boost and a potential return of this area. But in order to confirm something like that, we need a day candle closing above the 61.8 territory. So that means above 165.50, 136.50. A daily candle closing above this level, because this should be combined also with the further rising of signal line in MACD. RSI is anyway in a rising mode, so confirms this potential. But that would be a trigger point. If we see the asset closing about 136.50, closing the day above it, then the odds increase for a reversal back to 138.60, the highs that we have seen in March. Intraday, I'll put the intraday setup, so that would be an excuse also to reply to my friend John that is asking to explain the green and my favorite two green and yellow lines. So this is a 5 and 9 exponential moving average. And you mentioned the 21 exponential moving average as well. Yes, that's a strategy. So every confirmed crossing of 5 above 9 or 9 above 21, that's an indication of a potential near-term boost. Any bearish crossing, so 5 below 9 or 9 below 21. That means a near term, and by near term I mean in an hour, 30 minutes, so in the very near term, because this is a strategy, this is a setup for intraday. It's an intraday setup, my dear John. So less than an hour and less. So these kind of crossings are bullish and bearish signals for 30 minutes charts or an hour chart. Okay, over here you can tell me, but Andre, okay, so that means that now, right now for dollar cut I have a bearish cross because 5 is below 9, so I will go short. No, no. Why? Because slope matters. The slope is not significant, so they are not like that. They're like that. They're a bit flat. The lines are a bit flat. Do you get what I mean, John? The slope is not something that we've seen like here, for example. Initially, it was clashing. So eventually it started, the gap between the two lines started increasing. We need to see the gap between the two moving averages to increase in order to trigger us for a long or a short position. Of course, it cannot stand alone. Confirmation either from your stochastics or pivots or fractals, it will strengthen the decision to go short or long. In this strategy, I will delete the back D because it's for a medium term, not for the 1 hour. So you see, I haven't did a bearish cross, but the asset has been in a range since yesterday 2 o'clock. So it's been in a range. It's been stuck in this range. Okay, I had a bearish cross, but my moving averages are flat, Bollingers are flat, RSI is at 50 territory, so neutral. I have a bit of a bearish crossing from stochastic as well, suggesting that there is some pressure, but as long as I don't see the asset moving and breaking the day's lows, and the gap between the 5 and 9 increasing, so I need some further negative candles to confirm a potential short position. Okay, we have a webinar about 5921 exponential moving average, so please check our past webinars. It will be very helpful for you. So I guess you are interested in intraday setup, so 1 hour and less, 1 hour and 30 minutes maybe. So you see, even in the 30 minutes chart, I have the crossing, but the lines are flat. So it seems that there is no further steam to the downside. It's still consolidating. So right now for the dollar cut, this doesn't help. It doesn't. No, it helps, but it presents that there is no. There's no point of entering dollar cut either up or down for 30 or 1 minute chart. Now, my dear friend Siyana, however, asked in general for dollar cut. So dollar cut, as I said earlier, had a nice boost, more than bridge 61.8 Fibonacci level. So we need confirmation. We need to see that break above 136.50 or move below the 50% Fibonacci level at 135.75 to believe to decide in a particular direction. And break below 135.75 could suggest a reversal to the downside for dollar CAD with immediate support at 135. A break above the 61.8 Fibonacci level could open the doors to March highs at the 138 level. Yeah, so quick view on EU, please. We did that. You mean I'm not gonna do again the euro dollar. This is what we are asking double because we have done it already. Thank you very much for your nice words, Ahmed. Thank you very much. Good day, Clerics. 1985. I'm guessing you're talking about gold over here, guys. So, you see, the candle that we're seeing drifting, it closed above 1990. A long tail, indeed, but doesn't change this neutral, this range intraday. Doesn't change yet the overall positive bias as well. So no questions from the guys in Facebook and YouTube. No further questions. No other assets that you want me to cover. It was just euro, dollar, CAD, and gold only. No. Okay. Questions. Gold. Guys, I'm here to help. Any other asset you want me to analyze? Okay, because many of you actually stick on the euro dollar. Guys, let's not forget the basics. Look at that nice, beautiful trend. It is consolidated indeed. In this, it does struggling to break the 110.70. Okay, but is nicely supported by the 50-day moving average, remains to the upside. So a break of 110.70 could open the doors higher. Intraday, all this boost that we have seen is ahead of the data. The data are out in 20 minutes time. Be very, very careful. Another pessimistic data out of US could uh, uh, boost euro dollar higher. So let's see. Okay, intraday, if you're trading the news are in 20 minutes from now. So I will put my 30 minutes time frame and the 5 and 9 exponential moving average as well. So for those that are trading the news, keep an eye on that one. You see, 5 and 9 are still like a bit flat, no crossing, nothing, no signal. But ahead of the data, a very important level to be closely watched is, to the downside at least, is the 110.15, 110.20. Here it is. This one, 110.25, 38.2 Fibonacci level. Below my latest down fractal, a kind of a resistance that has been seen since yesterday. Okay, that's not so significant. So 110.25. If it breaks, if we have an hourly candle or 30-minute candle below that level, that could means a reversal and a retest of 110. But it's unlikely to see further move below 110. Okay, so that would be a short-lived pullback. Yeah, because the data are expected to add more to the fear of a slowdown in the US growth. So let's see. Let's wait and see. The upside, the break of 110.60 will could retest the next resistance level of the day, 111. 111. Any questions? Any further questions? Guys, I have double. I have just replied euro dollar. I have Grigo just replied to dollar CAD. Kiwi. Why kiwi is so weak? Don't forget that kiwi and Australia dollar are very strongly correlated. Antipodian currencies correlated with gold. We had the Australian inflation showing a 7% level for the first quarter. What is my kiwi? Coach is not kiwi is not. It is okay. It is. Let me zoom out a bit. Someone asked about Aussie yen as well. Okay, Aussie yen and kiwi. Okay, nice excuse to discuss a bit about about antipodians. So kiwi, Australian dollar, because they have some nice moves and some trigger points, some significant breakouts. Um, so let's start with kiwi. Kiwi is indeed at March lows. March lows. Look at that. It's a floor that we have seen back in March, so it's been retested again. Uh, uh, RBNZ. Let's not forget that RBNZ is expected. Is it next week as well? It's expected to hike, to increase rates as well. But is it next week along with RBA? No, it's not. It's not next week. But we have the unemployment next week from Kiwi, from New Zealand. But okay, let's take it step by step. We have this latest. Actually, let's focus to the last to April. This in April, we have seen some kind of deterioration, decline of kiwi, of kiwi dollar. Um, uh, so we need to compare. So this is a comparison between New Zealand economy and US economy as usual. And the interest rates between those central banks. Let me find the central banks interest rates. So Kiwi, so New Zealand is at, come on, New Zealand. I don't remember it by memory, sorry. I've seen so many things lately that, where's my New Zealand? New Zealand is at 5.25% interest rates. US is at 5. Okay, so and is expected to increase further, right? So on the prospect that on the next meeting of FOMC, we are gonna see a potential 25 points is what could be responsible for the decline of kiwi. So it's all about yields differentials. So this difference it has caused this kind of a decline. What else I wanted to say about kiwi? I think trying to remember or to find when the RBNZ meeting is, but I cannot spot it right now. Nonetheless, I remember what they said last time, dear coach. The RBNZ in their meeting last time, they actually propose to lose a bit the loan ratio, the restrictions that they have in regards to loans rates and loans ratio. So that implies to an easing of monetary policy. So that tends to be negative for the currency, for the kiwi. Even though the interest rates are a bit higher than the US dollar ones, 5.25, the fact that they said that they will loosen the loan to value ratio restrictions that they had so far has been interpreted as a sign that they will pause and will not increase any further rates. Actually, they told it. I think they said that they are considering to qualitative easing monetary policy. So that means that they signal that they will stop increasing interest rates. So that has as a consequence the decline of kiwi. Now, here is at the very crucial level. It's close to the 161 level, the lows of March lows. If indeed Fed increase rates next week and Kiwi and the RBNZ pause interest rates, this decline will continue. So if we see these two fundamental events happening, along with a breakout of not 60 level, round number, triple zero number, and etc. Actually, 168, yeah, 168. Then years supports, crucial supports, are 0.60 and 0.59. If indeed this scenario comes in play, RBNZ confirm a pause of interest rates, Fed increase interest rates next week, decline, and if from a technical perspective RBNZ breach and breaks March lows, then we might see this decline extending to not 60 territory and not 59 territory. I also use my Fibonacci. The Fibonacci levels are also very close to the support, the two supports that I just mentioned. So these are the next key support levels to be seen in the long term. Now, so it's all about guys, you keep asking me about euro. I did it. Pound yen, yes, pound yen, pound yen, and Aussie yen. Okay, let's do that. Anyway, for those that you're asking euro dollar, as soon as I end the session, you can scroll back to the euro dollar and watch again the analysis. I have done it 2 or 3 times in this session. Overall remains the positive side. So Aussie yen and pound yen. Yes, actually pound yen is I have it on my list. And Aussie yen, I have it on my list. Actually, it triggered my attention as well. So let's start with Aussie yen. First come, first served. So you prefer black lines, I think. 5 and 9 intraday setup, 1 hour chart. Here we are. Drift, possibly corrected, extended the losses, retest the first support of the day, but it's a bit straightforward, I think. Look at that. Downtrend, lower lows, lower highs, below pivot point. Okay, a bit of a correction, but another lower low. So lower low, lower low. Momentum way below zero, negative, way below zero. RSI increase a bit, but remains below 50, very close to the oversold territory. So just it says to us that, you know what, this will be just a correction, a small rebound, a short-lived rebound. The same stands for stochastic. It is a bullish side, it is a bullish crossing, but it looks to be short-lived. So retest again the high of the day, the 88.74, before another fresh new lower low, because the overall trend remains to the downside. This is the 4-hour chart. So my dear friends, and because you didn't mention DRMEGA, what time frame you want me to analyze, Aussie yen remains in a sharp pullback. You can see this daily candle breaking way below 20-day moving average, very big candle, extending back to April's lows, with a potential retest of also March lows down to 87 or even 86 territory. So an overall negative outlook intraday and in the medium term outlook for Aussie yen. So this latest swing higher, it doesn't it's against this rising negative bias that we have seen from MACD, and because we've seen any, we mentioned all these technicals. That implies just as a correction um, before another attempt to the downside for Aussie yen. So key support is the low of the day, 88 level. To the upside, the 88.75 is a key resistance level. A break of 88 could find the next floor at 87.20. And last but not least, before I call the date, the where is it? The pound yen. Let's go to the pound yen. Yen. Rising exponential moving average, rising MACD line, rising RSI about 58, rising stochastic, and it looks like stochastic is ready to post another bullish crossing over here, implying that there is further steam to the upside. So the next levels to be resistance level to be seen for the pound yen is the high of the day 167 and 167.40, which is our very first resistance level based on the pivot point analysis. Overall, pound yen has been in an upwards upwards movement since the beginning of April, with the asset holding gains for 2 weeks in a row, more than 2 weeks in a row, holding a move above the 20-day moving average. You see, this is a nice floor because we have consecutive lows over here. Can you see that? It's, this 165.60 level remains a key support as long as the asset and the bulls fight to hold the asset above this level. This upwards trend is expected to remain, um, and because it's also something that we there is a comes in line with rising MACD, positive MACD, RSI above 50. So, yeah, positive intraday and in the day chart as well. Yeah, so that's pretty much it, guys. I'll close the session if you don't have any further questions. Okay, you had some consecutive questions, Junior. Why use other indicators to work with Fibonacci? Each one of you guys should find the indicators that make sense to him, the ones that you understand, the ones that you prefer, that suit your personality, your strategy. Okay, so that's up on each one's discretion. Whatever works for you. You don't need to stick with Fibonacci. You don't need to stick with moving average. You don't need to stick with MACD and etc. Find the ones that you like, you understand, and they fit your strategy and what you aim to achieve, and in which time frame you aim to trade. So indicators, time frame, everything depends on each one upon the discretion of each one of you, because some people find it extremely frustrating to trade in a 30 minutes chart or 15 minutes chart or even an hourly chart. So it's basically you need to find out, either by using a demo account in order to test yourself, to find out what's the time or appropriate time for you that suits your mentality, your personality, the time, the free time that you have in order to, I mean, it might not be available might not be able to check the markets all the time. You might have it as a hobby, as a second job, or whatever. So a lot of things. Um, yeah, you need to find out what kind of trader you are. This way, you will spot the. You will be. You can use the indicators that you prefer. Identify the time frame that you prefer. The way of strategy of the kind of trader that you are. Day trader, scalper, and etc. Many price action trader, etc. There are many different ways to trade, different mentalities, etc. So that's absolutely up to you. Again, it's all about constant learning, constant discipline, having a plan, identify strategy, practice, appropriate risk management, uh, a lot of things. They need. It's like every single other job or thing in life, business in life. Study, keep an eye on the news, keep yourself up to date, practice, create a plan, business plan, stick to it, be disciplined, appropriate risk management. Don't use all of your balance in a single trade, for example. Okay, so yeah, as we mentioned, in regards to the gold, overall remains in a positive outlook. It's everything about economic growth and central banks interest rates. Okay guys, I'm gonna call it a day. We've been here for, oh my god, an hour and a half.
News is just the news is all just.
Oh, the news are out. Totally forgot the durable goods. 3:30. Okay, let me check them as well. Go wait, since we. Durable goods ex transportation 0.3%, 3.5, 0.3.2. So, let's get back to dollar then. Let's see how the dollar reacted. A bit muted for the time being. Okay, they have just been announced. A bit expectation higher than expected. Let me just where is it? Let me show you also the calendar. Durable goods at 3.5% here. It says 3.5% rise in March. 3.2% against the 0.8% expected. So that's a very significant growth seen in durable goods in the United States. The significant bit. So just check a bit something. It's more than double what was expected. That's quite positive. Let me just check to see the breakdown a bit. It is dollar positive, but I see a bit of a muted reaction for the time being. Maybe markets are still, you see, this is a 30 minutes chart, let's see 15 minutes chart. Markets are trying to understand this rating. It means the dollar hasn't moved for the time being. It's been only 3 minutes, but these are positive data. Advanced good trade is out as well. 84.6 billion deficit and 90 billion deficit. Muted reaction for the timing on dollar, maybe a bit delayed, but durable goods bit should be positive for dollar.
Bitcoin hits 30 grand. Bitcoin's hit 30K.
So then the one more was Bitcoin. Yeah. So no reaction for the time thing for euro, but Stuart just told me Bitcoin spike on that on the announcement. Oh, it breached 30,000 level. Breached 30,000 level. The big candle in this 15 minutes chart. Okay, very interesting. Bitcoin breached 30,000 level. Immediate resistance. Next resistance is on these consecutive fractals, up fractals at 30,500. The very next resistance holds at 31,000 territory. So on the news and ahead of the news, actually, Bitcoin extended gains, while for the time being, dollar is a bit stuck on one level. What about the other currency pairs? Same. So key mover on the announcement is Bitcoin. It had been in a rally since yesterday anyway, but it's my gold. Let's check gold as well. Reacted. Remains in the range, remains below the 2000, a bit of to the upside for the time being after the announcement. Okay. Let's wait and see. So, for analyzing market, you mean the data or in regards to the charts, dear Junior? How to analyze the results or the actual charts? I'm not quite sure what you mean. I will wait a bit for your reply. What advice can you give us for analyzing the market? Oh, no reply yet. Okay, just before until Junior replies, just to uh, clear this up a bit in regards to the durable goods, because it was the very well expected, significantly expected data. So way higher than expected. Um, there is some kind of a downwards revision. Am I wrong? Let me check. Yeah, there is a bit of a downwards revision in the headline. So from 1% to 1.2 negative 1.2%, from 0.5% to a negative 0.8%. So the revisions were a bit lower, but the actual numbers are more than double of what was expected. So that should be dollar positive, but is muted. So the breakdown might be responsible for this choppiness in dollar and this indecision in the dollar right now. The one that spike is Bitcoin for sure.
There must be some news.
Yeah.
News.
Yeah, Stuart saying that there might be something else going on, some news. Trying to check our news feed, but I cannot really. Yeah. Yeah, I cannot really find something about Bitcoin. Yeah, let's wait and see. Okay, that was it, guys. I'm gonna call it a date. We've been here for an hour and a half. I don't have any reply from Junior, so. For those that keep asking about euro dollar, we have analyzed it 3 times in this session. So as soon as I end the stream, you can scroll back and check again our analysis for euro dollar. Have a great day ahead. Take care. Tonight we have Meta, as I initially said. The important events of the day are over, and it was durable goods. So we don't have anything else from the economic data perspective that is so significant as durable goods. So eyes on Meta for tonight. Have a great day ahead. Take care, and I'll see you again. Actually, we might hold another live tomorrow or on Friday. Thank you very much. See you later on. Bye bye.